The dollar versus Canada moved down sharply in trading on Monday and into Tuesday. But the low price that we saw yesterday did find support against a familiar level. I'll talk about that and the other technicals that are driving this currency pair. So let's get started. I know it's become somewhat of a cliche, but if I put a red box around this area right through here, outlined by the lower swing area down here in yellow and the higher swing area over here, also in yellow, most of the price action over this time period has been within that red box. Now, yes, there have been moves to the upside and that moved higher and rotated back to the downside. Most of those moves to the upside were on tariff news from the U.S. on Canadian goods. Then we had some more positive hopes through here that took the price below the low end of the red box, and this period right through here lasted about a week and a half, with the price outside of that level rotating down toward the 140, 150 level. The lower swing area comes between 142.68 and 142.78.9. And the upper swing area comes at 144.48 up to 144.71. In trading more recently this week, though, what did the price do? Price came down on trading yesterday and tested the lower boundary of this swing area down near the 142.68. And what do? We found support buyers against that level. Not surprised, I guess. We've seen other times where the price came down toward that area right through here, even here, and we based against it right through here. We found resistance against it here before moving to the upside. We found support against it here after breaking below that level quickly and rotating back to the upside, came back down to test that level. So these lows right through here in this trading this week are not necessarily surprising. We've been outlining this red box for quite some time now. We have seen a rotation to the upside as a result of that. Sellers turned to buyers and we pushed the price. Where do we go? Went right up to the 200 bar moving average on the 4-hour chart right through here. We did find support against it here before moving to the upside. We found support against it here earlier this week before breaking and selling to the downside. So this 200 bar moving average at 143.33 needs to get broken and remain broken to increase the bullish bias just above that level. Is a 50% retracement of the move up from the February low to the March high. That level comes in at 143.45, and then we get the 100 bar moving average. These moving averages are near the middle of this red box, of course, indicative of this non-trending up and down price action seen in the dollar versus Canada. Also in play, if we go to the hourly chart, are the 100-hour moving average, which is just above that 50% retracement, and the 200-hour moving average, which is near the 200-bar moving average on the 4-hour chart. That level comes in at 143.74. Going back to our 4-hour chart, the 200-bar, or actually the 100-bar moving average on the 4-hour chart comes in at 143.76, just a couple pips above that 74 level. So that increases this area's importance right through here, including the 50% retracement and the 100-bar moving average on the 4-hour chart, 200-hour moving average on the hourly chart, key resistance on the top side. But right now, with the price staying below the 200-bar moving average on the 4-hour chart after bouncing off this support, there's a battle going on between support against the lower end of the red box right here and the 200-bar moving average on the 4-hour chart here. We'll see how that gets resolved in the trading going forward. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.